Hi everyone, so welcome to Investing for Value. So today I'm going to look at Revolve. They've just recently released their fourth quarter and the full year result for 2019. So I've done videos on this company before, but if you need a refresher, this is a fashion retailer for millennials and Generation Z, as the company puts it. And they basically do their marketing through influencers that recommend their clothing, and it has been hugely successful. And in terms of a retail environment that's very competitive, we still have this company doing very well. But the one thing that I should point out right now is in the aftermarket, the stock is down 18%. So the market has not taken this well. So what's kind of different? Why wasn't the market that happy about this result? So we're going to look at the financial metrics. So in the 3 months prior, in the fourth quarter, which is including your Christmas, revenues are up 16%. But if we look at the financial for the 12 months, it was up 21%. So when you look at this number, well, the 16% is actually a lot lower than the 20% they were consistently getting. Well, over 20%. They were actually averaging around 22%. So even though, that's why it's brought it down to 21%, because the growth in the prior quarters were much higher, at least 22%. So just 16% kind of brings down the growth figure to 21%. But it's also like a sign to come, like that potentially this company may not be growing even at 20% now. They may be growing at less than 20%, which is kind of a shock. So potentially that's the problem. Like that's the problem of growth companies. The minute the growth rate drops, it kind of sends a bit of shock. A lot of investors, um, get disappointed. They kind of sell out. The share price drops in a big way because the valuation drops a lot for growth companies that don't meet up their growth. So in terms of net income, the net income was up 9%. So one thing I've always reiterated is if your net profits are growing much slower than your revenue growth, that's a sign that your margins are not as good. So as we can see here, the margins in 2018 was 54%, and then it's dropped to 52.9%. So that kind of points towards that maybe their margins are under pressure, at least for the fourth quarter. It might be competition's tough, Christmas is around the corner, or they might have just discount a lot of products, and they just have to get them out the door at a cheaper price. If we look at the 12 months, they actually managed to get higher margins from the prior three quarters because their margins were 53.6, which is slightly higher than the year prior, which was 53.2. But at the end of the day, like for me, this is a big sign. This is a sign that if your net profits aren't even matching the growth of your revenue, because normally when you cover your overheads, you're mostly focused on your variable costs, and when you're focused on your variable costs, you generally earn a bit more profit. So as you earn more revenues, your net profit actually starts to grow at a more substantial rate than your revenues. So you can see here, like revenue 16%, net profit 9%. But if we look at here, it could just be like the Christmas quarter that they just don't do very well because it's a very competitive period and they have to mark down a lot of stock. As we look at the 12 months, and it was up 21%, and net profit was up 16%. Still the same thing, like net profit should be keeping pace with your revenues, particularly at this stage for this company. Though they're probably spending a lot of expenses expanding internationally and also trying to keep shipping down. And it puts pressures under the margins. So for the 12 months, it's actually not that bad. I think for this last three quarters, there looks like to be some concern, but it could just be it is very competitive. And if you're able to make it up normally in the first 3 quarters, then that's not too bad. And then on the last quarter, you just try to boost sales, and you sacrifice a little bit of margin. In general, in the scheme of things, that's not too bad. Though it does merit a little bit reduction in your growth. So at the end of the day, like this quarter was probably quite disappointing to a lot of investors. A lot of people kind of see this as you're not keeping up your growth rates, and is this a sign that in the future your growth rates are going to be less than 20%? It's looking like that from these current numbers. Though, this is still a very good company. It is a company that has utilized influencers to market their products, which has been very successful. Their clothing line sells very well, and they continue to perform well, growing out internationally. So we look at this company, and like the last 6 months, we watched his price, like go as high as $26. Mind you, like before that, the stock got as high as like $42, which was insane in my view. And then it came down and down and down, and then it came down to as low as around that $15 mark. Looks like, but yeah, like kind of looks like it might be testing this mark very soon, when the market opens much later on. Then the share price came up, and then it went had a little bit of down period. Then it came up again, and then and it just closed recently after around $19. Then announced their financial reports, and the reaction is down 18% to $15.80. Though the market might open at a different price, but this is what the aftermarket pricing is currently showing for these results. So it means the market's a little bit disappointed. So like at the end of the day, you just have you can see it. Growth has slowed a little bit, but not like in a significant way. Like growth is still not bad, though. I'm actually more concerned about their margins, rather than the growth. If they can keep that growth, but not at the sake of margins, because at the end of the day, you want to keep your margins. And this company is going to be judged. Once the growth drops, it's going to be judged based on their net profits. And net profits was about 35, right? So, like, assuming we're being a bit more generous, and we say a PE of 25 on the 35 million, that only gives me a valuation of 875. But given they're retail and they've been very good at what they do, and like I'm not very inclined to really push the valuations that much more. But if we try to just push a little bit more, because they've been very good at what they do, and give them a P of 30 on the 35, that only gives me $1,050,000,000 in valuation, which current valuation is 1.37 billion. So in my kind of view, it's kind of a bit expensive based on the current situation. Even if I value it at $1,050,000,000, it's got another 300 million to race off, which is going to be painful. Like that's a good 30% drop, before I recommend buying. But I mean, at the end of the day, good company. Though I think when you're measuring on their net profits, things aren't looking as great. Though we can do a forward projection and go like, okay, they're growing at 16%. I'm gonna knock off 2 percentage points and say they're gonna slow down a little bit. So at 35 million, and then they're gonna grow that net profit by 14%. That gives them about 40 million. At 40 million, mind you, the growth will continue to slow down as they keep going. At 40 million, they on RP of 30, we get a 1.2. So even if I'm going to value for the next year, which sometimes markets do that. We're still looking at a 1.2 billion valuation, which is still a bit lower than the current valuation. So it's very hard to recommend a buy at this 19 tag. I have previously talked about this kind of pricing being a little bit high in prior videos. You can look at them in the video list and you can see what I was talking about. And now that this has happened, what like you're probably thinking what price is a good price for the stock, or if you own the stock, should you sell it? Well, I think it's very much a personal decision whether you hold, buy, or sell. If you sell and get rid of it, then okay, that's so be gone. There's always better opportunities in the market. If you still believe in this company, then what you normally do would be average down, and in the future, you hope this company performs better and comes back stronger. So in terms of pricing, what's a good pricing? So I quite like the $1 billion price tag, which is significantly lower. So you can, the billion and 50 million, on 1.378. Well, that's quite a bit more. Let's see. Okay, so basically on that 19, a good pricing would be buying around 14, 14.70. So basically, I think if you buy around 15 or less, you are buying at fair value. And if you can, I think if you can buy below 15, it represents a good hold, at least for the oncoming year. Assuming that the coronavirus does not impact them too heavily. And the current market, there is a massive sell down. So I would be trying to aim for that $14 mark if I can. If you really want to, then 15 is the mark. Anything higher would make it very hard to see, massive gains going forward. But that's just my opinion. You might have a different opinion. Um, like I noticed other people on YouTube kind of loving this stock. So like their views are going to be different from my views, and who knows? I could be wrong. I could be right. At the end of the day, like stock price is not showing. A lot of investors are selling. This could be also part of the massive sell-down that's just been happening lately. So like at the end of the day, don't panic too much. Just reassess the story. Growth rates have dropped a little bit, so maybe they don't merit a valuation around that 19 yet. So you could always just try to average down if you want, or if you're thinking about getting into stock, then I think that $14 to $15 mark might present an opportunity to be getting in. But that's just my opinion anyway. Let me know what your thoughts are, particularly with these results. Do you think the growth has been impacted, or will this company come back stronger? And if you have any other stocks to talk, or you want me to talk about, just talk about it below. Just comment, and I'll be more than happy to just give it a look. Look good, and I'm able to do some good research on it. Apart from that, yeah, good luck investing, everyone.